Hey everyone, this is Matt Donahue with Mission Financial Planners, and this is your weekly market update for the week ending September 13th. Let's go ahead and jump into it. We're going to talk about last week's V-shaped recovery. We saw some pretty rocky returns overall in the markets earlier this month. We saw some huge gains last week, anywhere from 3 to 6%, depending on the index you're looking at. The recovery was driven largely by the tech sector, which had been down significantly in early September, but has now jumped dramatically to make up most of those losses. Inflation is slowing down as well. July, we had a 2.9% consumer price index report. August, which just came out last week, was 2.5%. That helps bolster the case for a rate cut, hopefully announced tomorrow by the Fed once they've concluded their two-day meeting. Yields are dropping as well. There was a peak on the 10-year Treasury of 4.7% back in April. Yesterday, it was, or at the end of last week, I should say, it was down to 3.66%, so a significant drop. Consumer confidence is rising as well, according to the University of Michigan's Consumer Sentiment Index, rose all the way to 69 from 67.9% in August. And when consumers are asked, their expectations for inflation are really the lowest they've been since December of 20. So that's good news there. Gold futures, gold just keeps chugging along. It hit over 2,600 an ounce on Friday. That was a new record. It's been on an upward trend. It crossed 2,500 for the first time just on August 19th. As I mentioned, the Fed is meeting this week. We're expecting, I should say, a rate cut anywhere from quarter of a point to half a point, but we'll see. We'll find out more about that on Wednesday. Philosophy quote of the week. This comes from our friend Seneca. Anyone can get lucky, but not everyone can persevere. What he actually said was, success comes to the lowly and to the poorly talented, but the special characteristic of a great person is to triumph over the disasters and panics of human life. So anybody can get lucky. Anybody can be born into a good situation, but people who have to actually overcome, persevere, keep their cool, hey, they earn it, right? They earn it. And a lot of you listening to this, you've earned it. Tax tip of the week, the Taxpayer Advocate Service. It's a fantastic service. I think a lot of people really don't even know it exists. It's part of the IRS, but it operates independently from the IRS. And it helps people, it kind of acts as like a last line of defense. Especially for those people who maybe are having issues with things like levies and seizures, or maybe they're feeling like, hey, you know what, there's this process I'm trying to follow, but it's not working at the IRS. So the TAS is in every major city. They're located in the IRS offices within every major city. Like I said, they're your last line of defense, especially if you're not working with a certified public accountant, an enrolled agent, or a tax attorney, because those people can actually represent you in tax court. So if you're having some issues, it doesn't hurt. Look up taxpayer. The Taxpayer Advocate Service, TAS, and they might be able to help you. It is still Life Insurance Awareness Month. We're going to talk about one method today that you can use to calculate what your insurance needs are. It's called the DIME method. And basically, DIME stands for debt, income, mortgage, and education. So debt is going to be your credit cards, your student loans, your car payments, all that stuff. Don't forget, I would say, to put in a little bit for your end-of-life planning as well. Income, hey, number of years you want to replace, just take your income and multiply it by how many more years you think you're going to work. Add your mortgage balance and whatever your vision for education is for your children, add the cost of that in there as well. You do want to work with someone who's pretty good at financial planning, though, when you're selecting a policy for a whole variety of reasons. As you saw last week, there's a lot of different types of policies. The thing I would say this week is the DIME method is terrific. However, it can lead you to being over-insured a little bit. So you do want to make sure you work with someone who can help you find just the right amount. Short update this week, everyone. Thank you so much for paying attention and joining us week in, week out. We really do appreciate it. Tomorrow, we're going to be doing a tax webinar. Next week, we're going to be doing Social Security workshops here in San Antonio, and it just goes on and on and on. But thank you again so much, everyone. We'll look forward to seeing you on next week's weekly update. Thanks again. Bye-bye.